Good morning. Welcome to this roundup for global stock markets for the 22nd of March. During last week, we had a much anticipated decision by the US Federal Reserve on interest rates. Everyone's been hanging out waiting to see whether they would firm up a timetable for raising interest rates. And the Fed basically changed their language a little bit, but put in so many provisos that had to be met for interest rate rises to start that it's created what I think is as good as close to the ideal environment for stocks that you're probably ever going to see. It would appear that interest rates are going to stay low for a very extended period of time, and that we may not actually see any interest rate rises this year. Stocks loved it, and we're back close to all-time highs. So a pretty important week for a lot of financial markets. So we'll go through all that. But again, just before I start, just a message to non-members of Specialist Share Education regarding the Alpha Global Fund that I've been running since the middle of last year. There's been certainly some information sent out on that. The results we've had have been really quite amazing and very pleasing. However, I have had some feedback that that some people think the results are just too good and they're not believable. So as a result, I'm going to run a webinar next week to just basically go through how I've done it, the sort of stocks that I've been investing in, and what the process is. So if you're in that camp, if you're attracted by the results but you're skeptical about whether they can continue, then you might like to join us on Thursday night. Just a quick reminder, these are the results that we've achieved to the 3rd of March, and in the 2 or 3 weeks since then, those results have improved even a few more percentage points since then. So I'm extremely pleased with those results. Let's move on to the big picture. There's simply been, on a big picture level, some extraordinary market moves, and I've been saying since the start of 2014 that we would move into a very volatile period in financial markets as these bull markets progressed. 2014 certainly saw an abrupt change in volatility from the 2 very quiet years we'd seen before that. And I think 2015 is going to move up even higher in terms of volatility and sudden price movements. So just to summarize from a big picture level, just so that it's clear in all our minds what's been going on here, we've got oil down 61% in 8 months. That is an extraordinary move. The US dollar is up 27% in 9 months. You just don't normally see currencies move that amount in such a short period of time. The 30-year US bond yield, despite the fact that people have been saying this bond market has to fall over, but year after year it keeps going higher, and the bond yields actually broke 5-year lows. Quite extraordinary. And the overall Dow Jones Commodity Index, which includes all level of commodities, including agricultural commodities, has broken to lows below the GFC. I mean, I don't think anyone would have expected to see that. Now, normally this sort of upheaval should be bad for stocks because stock markets hate uncertainty. But the reality is that stock markets are still going up. We've got a next to ideal environment for stocks to continue to rise. And the wealth building opportunities are absolutely massive. So if you're ever going to be active in the market, then now's the time to be doing it, that's for sure. So American stocks, the S&P index rocketed up 55 points over the week. There'd been some pullback in the market the previous week, and it rebounded very, very strongly. And so what we're seeing is this continuation of a classic climbing of a wall of worry. The more that people are apprehensive about the stock market, the more it seems to rise. And I think that's one of the reasons I've been saying for over a year now that the market is nowhere near a top, because there are still so many people that are not in the market, so many people who are skeptical, so many people who are fearful. Any bull market finishes by definition when most people agree that it's a great time to be in, and everyone starts to get really euphoric about how much money they're going to make in the market. We're not even close to that sort of sentiment in the market, and that's why I don't believe that we're anywhere near a top in the market. I think a decisive breakout is building. We'll have a look at the chart in just a minute, and I think we're about to take off again on another run higher. So overall, 2015, a volatile year, but net positive for stocks. I think you'll see the US stock market several hundred points higher by the end of the year than where it is now. But look out for the volatility. And we've got the Russell 2000 and the NASDAQ indices are also strongly confirming the trends that we're seeing in the S&P. So let's have a look at that chart. So this is the S&P index, the big dip that you can see here underneath the red 150-day moving average line is the sharp dip we got in October, but since then it's just gone straight back into uptrend, and you can see we've got a succession of higher lows and also higher highs. Now we are very, very close to breaking those previous highs that we saw here in February, and so I think it really does look very strong for the US market to continue on. If you look at the NASDAQ, you can see also continuing to do extremely well. In fact, it's even a little bit closer to its February highs. And if we look at the Russell 2000, just get the right chart up, you can see that the Russell 2000 index, if we pan right back, this is at new all-time highs. So the people that are calling for a top in the market, there's no way that's going to happen while the small cap end of the market is setting a new all-time highs and outperforming the biggest stocks. You know, that's a classic sign of a bull market in full flight. So I'm not concerned about an imminent significant correction at all. Now, could we get 5 or 10% sharp move down for a month? Yes, absolutely. So I'm not just saying that this market will just continue to scream higher. 2015 will be volatile, but it's those opportunities that are the ones that you really want to try and cash in on when the market pulls back. Now, turning to the US dollar, because that's having an impact on a lot of different financial markets. This historic bull run is still intact. But we've just seen some quite extraordinary volatility in the dollar that we haven't seen for some time. So is that signaling a top? I don't know. It's too early to say at this stage. The Aussie dollar looks to be heading below 70 cents. All the fundamentals would suggest that the US dollar will continue moving higher, while all the European and Japanese central banks continue to ease. The Australian dollar probably heading lower. The only concern I've got is that the conviction about where currencies are going, so US dollar up, euro down, Australian dollar down, the conviction at the moment is so high that it's the kind of environment where you can get a sharp rebound the other way. So I'm just a little bit cautious about assuming that those markets will continue. Now the ASX 200 was higher by 160 points on the week, and finally it posted a new closing high post 2008. It's taken a long time, 7 years, and we've finally got there. It's all about yield. There's no value here. Yield stocks are just going to keep getting bid up higher because of the comparison to interest rates. That's a very dangerous trade to take longer term. It's working at the moment, but it's not one that I'm prepared to buy into at all. So let's have a quick look at the US dollar index just to show you what's going on there. So you can see we've had a very, very smooth progression. You can see all through that period. The purple line is the 20-day moving average, and the blue line is the 50-day moving average. So it's been a very, very smooth progression, but then we've finally got some quite extreme volatility. So Wednesday, we got some very sharp volatility on the Fed announcement, and then it rebounded the next day and then went down again on Friday night. Now, often this sort of volatility signals a top in the market, but at this stage, we still haven't broken and closed below the 20-day moving average, let alone the 50-day moving average. So the US dollar index bull market's still intact. Let's just take a bit of a big picture pan back. You can see just how massive this run has been from 79, touched 100. Perhaps this little pullback we're getting is just a reaction off that technical 100 level, and we'll see it just consolidate here for a bit and then push higher. Finally, just quickly looking at the Australian market, there's the new closing high post 2008, and it's really been carried a lot on the banks. If it wasn't for our banks, we wouldn't be anywhere near those levels. Moving on now to commodities, gold was up $16 on the week to $11.74. I'm finding it really difficult to read what's going on with gold. Could be this is a final double bottom over the last few months or so before a new bull market starts, but look, I don't have a high degree of confidence in it. And if the US dollar consolidates and then starts to head higher, then gold's going to remain under pressure. There's no two ways about it. Now, the other point that I made last week, and I just reiterate again because this is the danger in being long gold stocks at the moment, is that if the gold price does break 1130, there'll be millions of sell stop orders under 1130, and that's going to trigger a cascade of selling, and we could see gold move very sharply. We could see gold drop $80, $100 an ounce in a night, just with all those sell stops being triggered. Now, if that occurs, then gold stocks are going to get smashed the next morning and you won't have a chance to get out. So that's why I think it's such a dangerous trade at the moment. However, having said that, gold stocks did reverse strongly over the last couple of days. We'll look at those charts, but to me, the risks are just too high. If gold breaks down, then gold stocks are going to get smashed. So I just think until we get something a bit more solid with gold, it's just too risky. So let's take a look at gold. First of all, on a weekly chart. So there's the weekly view. So we've been looking at this key support line here, which was at 1190. We had bottoms at 1190 in July of 2013. Bear in mind, this is a weekly chart. And then January of 2014. And then also in October of 2014. We then got a decisive break of that key support in late October. Now, quite often, the final capitulation move forms a new low, and then the market reverses and starts to go back up. Often, that is the final capitulation low and the start of a new bull market. So all that looked really good. Gold stocks were outperforming. But the US dollar has really taken off, and we've had this last final leg down. Now, is this just yet another retest, or is this a sign of weakness that the gold market just can't get enough momentum? And as I said, if we get a break of this 1130 level here, there'll be a lot of sell stops under these lows, the November lows. So if that breaks, I think you could get a very fast move down to $1,000 in gold. That's my concern. So we'll just have to wait and see how that plays out. I mean, ultimately, if you want to be conservative, you wouldn't do anything until gold formed a new high here above 1,300. So somewhere between a breakdown of 1130 and 1,300. I know it's a pretty broad range, but somewhere above or below those extremes will be the answer to gold. And in the meantime, I think we just need to stay out and be observers. Now, looking at the HUI index, you can see quite a nice rebound on Wednesday. And despite the fact that the US dollar went down on Friday night, you can see gold stocks actually did quite well. So quite quite promising there on gold stocks, but the bigger picture is I think gold is still just a bit too dangerous. Now copper has moved higher to a new high at 275, which is impressive considering the currency. So it's looking quite bullish. Now crude oil, West Texas Intermediate crude, again volatile, but actually inched up $1 by the close of the week. Now, if you look at history, the last 8 or 9 significant crashes in the oil price from the 70s, this bottoming phase where we tend to get a retest of the previous low typically takes between 1 and 3 months. So if that's the case, if it plays out in a similar fashion again, then this should be complete by May latest. Now, copper chart, you can see there, has moved higher in the last week. And I showed this this 1 year chart of West Texas crude on a yearly basis last week. And just to recap again, just to give you an idea. So this bottoming phase typically takes between 1 and, as I said, 1 and 3 months. So we might be close to it. It might still be another month or 2 away. So the overall strategic approach, stocks I expect to move higher in what is, in inverted commas, close to an ideal environment with all the central bank easing and the likelihood that interest rates are going to remain extremely low. There will be inevitable volatility this year. You can use that to advantage, and hence that's why I just think it's such an unbelievable opportunity to build wealth. However, complacency, just thinking that markets are just going to move higher steadily, will hurt you badly. So that's something you've got to be aware of. Just finally, if you want global exposure, there's no value in Australia. That's really clear. If you want global exposure where there's much better performance and much better value, but you don't wish to do it yourself for all sorts of reasons, then I do have this this Alpha Fund alternative. There's a webinar coming up this Thursday night. You should have received information from it. If you haven't, please get in touch with me and we'll send you some registration details. Hope to see you on that webinar. So for anyone else that wishes to communicate with me, there is my email address, and talk to you next weekend. Cheers.